In this video, I want to go over some trades that I've taken in the past 2 days. I want to go over what I've been doing right, what I'm doing wrong, what I need improvement with, because I know a lot of people are going to get some tips and tricks that they could improve their own trading with. I'm also going to show you a live recording of the tape so you could understand where my thoughts were and why I took a setup, where my stop loss was, and where my exit or target was. I'm confident you're going to get a lot of insight from this video. But before we get into it, I recommend everybody to follow me on my Instagram at Amertitrade. This is my only account. The link will be in the description below. Just hit it. You could follow me. I post daily trading recaps along with really good trading tips and tricks that I guarantee you're not going to find anywhere else. Again, the link is in the description below. You're missing out if you're not following it. But now let's get right into these charts. So the analysis the past few days has all revolved around this 4040 and 4045 level. It was an area of sellers that formulated on January 23rd. Over 10,000 lots hit the bid at 4040. And it was an area that every single time we came into it, sellers stepped into the market. Now, specifically, I'm going to go over Wednesday, the 25th, and Thursday, the 26th trades, because these are vital for what type of analysis that we're looking out for. So on the 24th, the day before the market closed, I said my key level going into tomorrow was 4040. Failed to get above this level and a break below 4015 and 10. I want to lean on the short side, targeting 3997 and then 3985. So that was the day prior. As we hit and closed 4040, we wanted to see the market reject this level and break below our 4010 level. Again, these are all levels that we were watching. This is not hindsight. These are all levels the market gives us, and we react to what it does when the market comes to those levels of interest. Well, overnight, we closed right at that level, sold off from it, and around 5 a.m. Eastern, we broke below 4010, provided a nice opportunity to take the market short, targeting our 3996.75 demand zone, where we briefly bounced off of it. And then a few hours before the market opened, we kept selling off, and we came into that 3996 and 3985 level of demand. Now, directly before the market opens, an hour and a half, in the Discord, I post my pre-market plans on a daily basis, levels I'm watching, setups I'm looking out for, and potential trading scenarios. Our bearish plan was that if we can remain below this 4010 mark, I would like to see a strong break below the demand and 3985 with strong selling pressure to play the market short at 3952. So essentially, we're looking to short the market now below this lower red line and use this demand zone right here at 3952 as a target. If you've seen my recent videos, I've been using supply and demand a little differently. So essentially now the market opens up and I did not take the first break below 3985. In fact, I was telling members that the plan already worked before they open. Does it continue? And we're going to find out. We're going to go with the flows of the market. We never go against the flows. The market's constantly spitting things at us, and we have to react to what it throws at us and compensate and formulate a plan around it while we manage our risk. So we were down 60 points from the high. I did not feel comfortable chasing it down there. I wanted to see a relief bounce first. So we broke below this level and we got that relief bounce. Now this is sort of a break and retest type of scenario where we broke below our key level, we came back up, retested it, and now we are below support. You would want it to act as resistance. When I see this, I took the market short again right here at 3982 with a stop loss above this 3985 level, targeting 3952. Now, one thing I want to make very clear, and I've noticed this a lot in my recent trades, entries have been excellent. I've been taking really, really good entries. However, my targets have been lacking, but especially to the downside, we've been lacking continuation. And my targets, example, in this case, my target was 3952, have not been triggering, and the market has not been moving where I expected to gravitate towards my target. So with this being said, I've been compensating and taking profits off the table when I have them, especially when I see something off the tape, and leaving a couple contracts open in case we want to see that continuation and our final target does trigger. I'm sure a lot of people have been noticing this as well. Let me know in the comments if you have been. And now in the intraday commentary tab, this is where I update my thoughts. I said I'm not shorting the open. I don't want to short below my level. I want to see a relief bounce fail, a retest of this level, and then short it. Again, no hindsight. This is all real time. And then a few minutes later at 10:05, I said there's some buyer down here at 3970. Bears must take him out. And when we did not take him out, it was a red flag for shorts. The buyer was still buying. And this is when I covered 75% of my position. Again, my targets have been short-lived. So if I see something that indicates a red flag that's saying, okay, Carmine, the market might have a hard time going to your target in the manner that you are taking this trade, for example, a scalp, where I want my scalp to go right to my target, I sold 75% of my position on this dip down, and then a reclaim of 3985, I got out the rest, where the rest were about break even on the sell, where the 75% were in about a 15-point profit to the downside. And that was a good decision because the market rallied all the way to the upside, especially when we reclaimed above 4010. And if we notice from the pre-market plan, the bullish plan was if we can reclaim above 4010, then we could look to play the market long for a rally back into 4040. We hit that end of day, and that bullish plan worked out end of day, but I found it to be very difficult to get an entry anywhere in this area without it feel like chasing. So now an hour before the market opens up, we get a rally. We had the job numbers that came out, and I updated my plan. Again, key level remains the same, but a failure to hold above this and selling pressure, then I want to lean on the short side, targeting 4005 and 3989. However, if we could open above it, I want to target the demand zone above. Now, this is a very important lesson because we can create plans, but the market doesn't care about our plan. It's not going to always respect our plan. It is vital to go with the flows of the market. You cannot predict the next outcome. You cannot guess where the market's going to head next. However, if you go with the flows and you react to the information that it provides you, it's going to give us information that's going to enable us to put a trade on. And as long as we can manage our risk, the outcome is out of our control. So in this example, the plan did call for the market to start rallying to the upside. However, I said I find this rally to the upside not very convincing, and it may be a trap to buyers. In fact, on the NQ plan as well, I said I'm really not digging this breakout from the buyers, especially that with the current information that we see on the tape. So yes, the market technically did open above 4040 and 4045, but the point I want to make here is number one, I did not take the market long. In fact, I took it short. And number two, do not have a plan that's so in concrete that if the market presents new information, that you're sitting there with your old plan and not adjusting to it. Sometimes the market will spit information out to you, and if you're sitting behind your screens like a stone, you're rigid and you're not able to bend and flex with the market, then you're going to get left behind. You're going to take bad setups, or you're just not going to take any setups when a really high quality one might be right in front of your face. So now when the market opens up, let's just zoom out a little bit. We're gapping up. We start moving higher. We're putting higher highs in, higher lows, and everybody is bullish. Now for me, I don't know if it's an instinct. I don't know if it's a gut. I just was not able to buy the rally at the open 4 minutes into the market open if we cannot get above 4071, 4090 supply. I was not buying this. Everybody was very optimistic that the market was going to break out. We're going to continue going higher. We're gapping up. Tesla's up 10%. Everything's looking good. Let's just get bullish for no other reason. The market opens up and we consolidate. I said that this was a very bearish open and the tape is very, very weak. Now the live recording on the tape, I wanted to include this in the video, and obviously I use other tools to validate this thesis. However, I'm going to show you a replay on the bookmap feature. This is going to show a time and sales and a level 2 visually in a different way. This is not a tool that's a necessity. However, it will give us information about the market between buyers and sellers. And if you are scalping future contracts, especially the S&P and NASDAQ, and you are a short-term trader, in my honest opinion, it's vital to use some type of order flow tool, such as a time and sales, level 2, price ladder, footprint, bookmap, whatever the case may be. So what we're going to see here is what you're looking at is 9:30 a.m. Eastern, and the market looks just like this. We have supply at 4071. So with this being said, what we are going to see here is a high a day fake out. This was a scenario where I just could not buy the rally to the upside. It didn't feel right. I knew many were getting long, and I knew it could have been a very big trap to the upside, still at or below the supply zone, where I'm not digging the breakout from buyers. In fact, these are conditions that, in my honest opinion, you should not be taking breakouts. So what we're going to see here is I'm going to speed up the tape, and you're going to see the market break the high, and it's almost like a whack-a-mole. The buyer peeks his head above, a seller is there swinging a baseball bat. Imagine walking into a room, and as soon as you walk into the door, someone's there just swinging a bat right at your head. What are you going to do? You're going to run the other way. And this is a perfect example of what it's going to look like in the market. We're going to break the high here at 4067 at 940. And keep in mind, I'm not bullish at all in this example. And this looks optimistic right here. Look, aggressive market buys come through. Nice buying volume, right? And that's totally fine. We could break out, but number one, we're still 2 points away from supply. So it doesn't make sense to short it, to long it from a risk to reward perspective. In fact, if this does fail, since we are so close to supply and with the context we're seeing, this is an indication that this is going to be a fake out to the upside. A buyer walks into the room and a seller is sitting there with a baseball bat. When he peeks his head in, whacks the head, and the buyer goes the other way and runs away. This is a good example of that as you see selling pressure come into the market. As soon as I see the selling pressure at 940, I got short at 4062 and a quarter. With this, VIX was also moving higher and other factors were indicating that it does not make sense to be a buyer on this move up. When you see something like this, you cannot hesitate. So I'm in short right now when the market looks like this. I'm going to speed it up here. Imagine you hesitate. What's going to happen? The market moves much, much lower. Okay, maybe we move, 2 points lower or 5 points lower, but still that's going to skew your risk to reward. As soon as you see it and you get valid confirmation with something that you know works out for you, take the trade and do not hesitate. So many people are so hesitant to enter. You are going to lose. You're not going to win every single trade, and it's totally okay to lose. However, it's not okay to hesitate. It's not okay to have a plan and not execute it. And it's not okay to not accept the loss or have a very large loss. So when I see this, I'm in the market short, and I'm going to fast forward this replay. And what you're going to see now is the selling pressure just keep going down. I mean, as soon as I'm in this trade, it starts working out pretty much right away in my favor. And the selling just keeps increasing. We keep hitting the bid very aggressively. And now we're at 4040, as this was that same level that we were watching at a few days ago. This is when I said we're going to see a weak tape. And then once this 4040 and pre-market low level cracks, we are going to see a lot of blood. And this is not a level that we're going to get short if we break below it. It's more for context. And obviously I was already in short, so I'm using it as context because not only was this a first target for a trade, but I was also targeting, if I zoom out over here, this 3989 demand zone. Now, if you remember what I said earlier, is a lot of my trades have been excellent entries. However, the market has been failing to find downside continuation, and my targets have not been triggering. And then I said 4040 is the key level. We need to get below and stay below with bears. And essentially what happens here now is as the market breaks below this level, we have a very, very hard time staying below it. And we have a very hard time attracting sellers at the low. And you have to also keep in mind, we're already down 30 points from the high. In a market we're not seeing continuation, 30 points is a lot. And you also have to keep in mind from the pre-market plan that is if we could hold above this 40 level and it acts as support, then I want to play the market long targeting 4071. So if I was not in the market short over here, I would be looking to take the market long in this area. Now this is why I exited the trade, just like the previous one, 75%. Not when we came into 4040 the first time. It was when we put in a higher low and sort of like an accumulation little pattern over here. And as soon as we started moving up at 4040, I got out 75% of my position here. I have 25% remaining in case we want to keep selling off into the demand zone lower. Now, directly after this, I knew some people might not have gotten short on the first sell off to the downside. And I said 4040 held from buyers. I remain firm that I cannot buy this rally below the 4071 supply. The signs on the tape leading this to believe it's a trap. I want to see a rally into 4059 and 65 get sold into for a move lower. Need to get below 40 and remain below it if you are a bear like I am. Real-time analysis, absolutely no hindsight. What we were watching for was a rally into this area that we found sellers where I got short earlier to fail. And guess what happened? We rallied perfectly right into this 4059 level. And this also gave a very good opportunity to take the market short. Guess what happened? Sold off below 4040. I was very optimistic. We're at 4028 now, which was the overnight low. That where our 3989 target was going to trigger. Awesome entry from this little relief bounce that failed over here for those that did not get short earlier. I mean, this is still another 30, 40 point sell off to the downside. You have to take the profits off the table when you have them, just like that. In hindsight, I should have maybe taken off another couple contracts down here at the lows, but I held it. I had a very high conviction that the downside was going to trigger, especially that we saw sellers earlier and a relief bounce up that also was met with sellers. We were below 4040. It actually acted as resistance. Things were leaning towards the sell side. Then we got the move up, and as soon as we got up past 4045 and reclaimed above this level, consolidated above it, this is when I was like, okay, my downside thesis has a very low odd now of working out. Let me get all out of my position right here, and that's what I did. I'm all out for the remaining contracts, still in a 10-point profit. Then we held that 4040, 405 level, and again, we rallied towards end of day into supply, very similar to the day prior. We got that dip down and an afternoon little rally up into supply. The same exact chart pattern was Thursday on a little different of a scale. Got that sell off, sellers we saw were present, then we got a rally. Now, where I stopped out of this trade for profit, it wasn't a stop for a loss, could have been, in hindsight, a good area to get long. However, I did not take the market long after this because I just did not see any viable entry point that it made sense to enter. Yeah, we were above our levels, but where could I have entered that not only the risk made sense, but also offered a good opportunity indicating that buyers were present? And I just really didn't see that in real time. Obviously, in hindsight, we could say, oh, I should have entered here or here. And for those that did take it long, nothing wrong with it. I just could not find a viable entry point. And that's been my mistakes recently. The first one is I've been taking really good entries, but my targets have been failing to trigger. I've been profiting, but I've been missing out on a larger move that I am expecting, and I'm sacrificing some profits because of that. The second thing is the past 2 days is I've missed those rallies towards end of day to the upside because it just did not make sense, or I didn't have a plan or a viable entry point for it. Remember, the market's like the ocean. Temperatures change, tides change, wavelength changes. The market's just like the ocean. We must go with the flow and never go against it. I'm going to end it on that note. Drop a like, comment if you have any questions, and definitely check out the links in the description below. Every time I post these videos, everybody asks me how to get into the Discord. I do not charge for the Discord. However, it is only available and it is only included for members of the Ameritrade course. It is a very, very active and engaging community. Everybody is looking out for one another, and we all have the same goals and the same endpoint. But peace out.